Thank you for staying tuned. Merge Exchange, an innovative end-to-end multi-market global financial exchange for equities, debt and derivatives, has announced the first ever official listing of a tokenized security on the fully compliant and regulated National Stock Exchange. The move comes just 6 weeks after the Seychelles-based exchange first announced its plans to combine traditional financial markets with distributed ledger technology, signaling the dawn of a new era for regulated digital assets. Well, joining us now to tell us more about this is the CEO of Merge Exchange, Edmond Toy. Thank you for joining us. Good afternoon, Mr. Toy. So, why did Merge make this move to list its own shares as tokenized securities?
The global securities market has actually been changing for quite a while. You've seen that we have seen that there is a digital age that's been coming for a while, and particularly we've seen it in Africa. You've seen mobile money in Africa basically leading the way in how people transact with money. We've seen in Ghana, MTN List have 226,000 applications, 128,000 applications, or 128,000 individuals in those applications, and 127,000 of those being Ghanaians, and that's all come from via mobile money or digital platforms. At the same time, we've seen in China that 99% of that market, which is now 8 trillion renminbi, is actually from direct retail participation, and it's from mobile phones. And you've also seen in global securities markets big changes internationally in mainstream markets with people like Standard Chartered, Deutsche Bank, UBS and Citi basically cutting back on what they traditionally were, I suppose, very strong in. Deutsche Bank has pulled out of securities markets altogether. So basically what we've seen is there's been a change in the way that people want to participate in capital markets.
Okay.
And so, in looking at that, for us, you have to make the move. You do need to make the move to go and use digital technology, and distributed ledger technology is going to assist in, increasing the pace of that move and making it easier for people to have choice in how they invest.
All right. So, is it significant that this global first happens in Africa?
I think, well, for me, I've been in Africa for about 13 years now, and interestingly for me in Africa, it does lead the way in a number of interesting parts of capital markets. And the examples I just gave you around payments, transactions and direct participation in securities markets, it certainly is happening in parts of Africa. Is it necessarily because it's all about Africa? For us in the Seychelles, what happened with us was we found ourselves in a unique situation where we are vertically integrated. So we basically have control of the trading, matching, clearing, settlement, and depository. We also have a piece of legislation that was written recently about 10 years ago, and was written, based on best practice and what was available. We have a regulator that really wants to work with us, and we have a very good, dedicated team of professionals that wanted to do this. So really, I suppose everything was there for us to be able to take this opportunity. Unlike, say, some of our competitors that don't have those things going for them right now, and they need to do a lot more work to be able to catch up.
So what does this mean for an African investor?
Well, for us, I suppose, what I generally find with exchanges is they do compete a lot, but they do complement each other a lot. And you'll find globally large issuers like a BHP will be listed on 4 different exchanges. So, for Africa, I do see that what we can work on is getting more local participation. So local investors, like I mentioned with Ghana, getting involved with securities. But at the same time, making it easier also for foreign investors to come in and participate. So we get, a nice strong mix of local and foreign investment. In an emerging market, in my view, and in our view as the exchange, you must have local participation in your equity and your securities capital markets. It's essential to growing your capital market and deepening your capital market.
All right, so what's the next step for Merge?
Well, at the moment, our next step is actually dealing with the demand from issuers and service providers of these issuers. Globally, there is a lot of service providers that are working on distributed ledger or blockchain solutions for issuers of securities, and a lot of these are regulated. A lot of these are, in fifth sandboxes with the FCA in the UK, and they're regulated in their jurisdictions. What they don't have is a secondary market to trade on that's licensed, and we do. So, as an example, we're looking to work with other providers and other people that have blockchain issuance platforms to provide pieces of the end-to-end of a securities lifecycle so that they can broaden their service offerings. We have a lot of sponsors, members and investors that we're needing to onboard. There's quite a lot of education that we need to do about exactly what we're doing. There's a fair bit of work that we need to do on ensuring that we take the blockchain ledger to the next level in terms of improving things like time series data from matching engines into or onto the blockchain and making that immutable. But at the same time, we have to be very careful and prudent in how much information we put on the blockchain, because you need to make sure we comply with privacy laws and considerations. We need to hire quite a few people. The demand is very strong, and we are going to need to raise some capital to be able to meet this demand and facilitate the growth.
All right, are you looking at doing an IPO, and why is the IPO important to Merge?
Well, at the moment, what we've been doing is we've been funding our own growth from our own capital. And why we wanted to do that was we basically wanted to prove it to the market and to ourselves that you can list a share and you can have the register hold it in the blockchain. We also wanted to prove that you could have partners in jurisdictions, so licensed brokers or securities dealers who can participate with our exchange and raise capital to, within the requirements of those jurisdictions. For a company, it's not a large company, and basically show that you can do this. So part of the reason for doing this is to prove it to everyone. And part of the reason is that we do need some cash to ensure that we can meet the demand that we're seeing.
All right, thank you for your time, Edmond, for sharing those thoughts with us. Edmond Toy is the CEO of Merge Exchange based in Seychelles. Moving now, Africa's largest bank by assets, Standard Bank, is considering entering new markets, particularly in the West African Economic and Monetary Union. This comes as its strategy to focus its resources on the continent continues to pay off. The Chief Executive Officer of Standard Bank says the bank is contemplating appropriately pricing acquisitions that fit with the company's risk appetite. He, however, did not give a time frame for the potential move, which he says will have an emphasis on digital expansion. And Kenya's Capital Market Authority says that KCB Group's takeover of state-backed National Bank of Kenya will go ahead if its offer is accepted by 75% of national shareholders. The comments by the regulator is in response to a call by some lawmakers for the government to reject KCB's offer as it undervalues National Bank. Meanwhile, the Central Bank, the Treasury and the State Pension Fund, which hold more than 70% of NBK, have backed the takeover, saying it is the only way of rescuing the bank from perennial liquidity challenges. Acting Finance Minister has reiterated the government's support for the deal, saying there is need for strong and stable banks to support the country's fiscal position, adding that all interested parties, including Parliament, are being consulted. And that's a wrap on the program for today and, of course, for the week. Thank you for watching. I'm Chimezi Obi Iwabu.